Stu, thank you for joining me on the podcast today. Great to have you on.
Thanks, Alex. Really looking forward to it.
Well, look, before we get into things, for people that don't know you yet, can you give us a quick overview of your career, sort of from PepsiCo through to growth stage CPG brands?
Yeah, for sure. My full career has been in CPG marketing. Spent the first 15 years with PepsiCo, all here in the States, on a variety of marketing leadership roles, big brands like Doritos, small kind of upstart brands in the health and wellness space, in innovation, shopper marketing, really the full gamut. And in the last 5 years, as you mentioned, I've been CMO across three different high growth brands in different categories, more across the health and wellness spaces, and currently lead marketing for California Olive Ranch, the largest olive oil grower and supplier in the US.
Lovely, lovely. Some real, I guess, differences there between the brands that you've worked in with PepsiCo, $2 billion brands with sort of $70 million budgets, and then more recently, sort of into lean PE backed businesses. What originally motivated you to make that move?
Yeah, it's a great question. I spent 15 years at PepsiCo and I really love my time there. Those type of blue chip CPG companies are just great learning grounds and places to set a great foundation for your career and the amount of
Hmm.
experiences you get, learning, development, everything. It's an amazing place, great people, very consumer-centric marketing, and you really put consumer-centric marketing at the forefront. But I just wanted to get a little bit more leadership and autonomy and opportunity to take the individual experiences at PepsiCo and more apply them broadly across marketing, more end to end. I
Hmm.
also want to get in health and wellness focused categories, learn more about the digital DTC space. Obviously, that's a major growing area and sector within um, CPG. And at a place like PepsiCo, there's a whole team dedicated. So you wouldn't necessarily really get that deep functional learning and leadership. So for me, it was about taking all the great individual experiences at PepsiCo, being able to put them together and have a more breadth of experience as a CMO in smaller scale, small to mid-size CPG brands across the health and wellness spaces.
What I guess looking back at your time at PepsiCo, what do you think has prepared you well for when then you made that move into sort of smaller, faster growth brands?
Yeah, I would say it's that real consumer centric mentality. You really learn how to do consumer marketing 101. It's like you get an accelerated MBA in marketing just working at PepsiCo. From thinking about a portfolio of brands to the brand strategy to big ideas, briefing, pulling that together, annual operating plans, working with agencies, bringing it to life, selling it in with sales teams and retailers. You just learn the nuts and bolts of how to do consumer centric marketing really well and pull it all together. So that's what really prepares you is just that training ground you get of all the best practices and approaches to of how to approach consumer centric marketing.
So, out of interest, are there any, I guess, specific frameworks or disciplines from your time at PepsiCo that you
Yeah.
still rely on today?
Yeah, there's still more than a few. I think the main one is kind of brand strategy on a page. What's
Hmm.
the business problem to solve? What's the marketing challenge? What's the marketing problem to solve? And then what are your key growth pillars? And then what are the key enablers embedded in that? That's a tried and true framework of what's happening in the business. How can marketing solve that? What are the big ideas of how we're going to do that? And then what enablers do we need on the business to help unlock that or on the team or budgets, et cetera? So context is very different. Categories are very different, right? I think one very interested one trap marketers can make is sometimes, frameworks are good until they're not, meaning they will give you good approaches, but you have to be careful. The tactics change based on the category dynamic. And I say category because category a lot of times drives how consumers think about your brand. So the same consumer might think about different brands and different categories differently based upon a variety of different things we won't get into. And you, so it's great to leverage those frameworks that are tried and true, but got to watch out that you don't apply the tactics to um, and fall into traps of doing the same thing over and over again, and make sure you keep
Mhm.
the category and consumer context and be nimble and agile to adjust as needed to make sure you're meeting the consumer need based on that category context effectively.
So throughout your career, I mean, you've seen the different sides of the fence. What are the biggest advantages that you see smaller brands have that perhaps the big CPG brands they often underestimate?
Yeah, it's a great question. I think the first one is speed.
Hmm.
Small brands have the ability to be nimble, move fast. Part of that is just the structure and the size of teams. It's not decision by committee. There's not, there are processes at small companies, but not near the meeting. There's not the meetings for the meetings, the meeting after the meeting. You get the people in the room, you make a decision, you move. I also think the speed is one. Part of what also helps with speed in the small brand space is that smaller brands are sometimes willing to lean in earlier on trends, where big brands might not be. They want to take a bit of a wait and see approach. So then the flip side challenge of a small brand is that you have to make sure you're still thinking about that strategically. You want to be fast, you want to be nimble, you want to move faster than the big brands, but you can't, you want to make sure you're not you know, a dog just chasing cars over the place. You got some thoughtfulness of, okay, still, because big brands have better rigor and a rigor that small brands a lot of times don't, which is good because that positioning and tried and true and, stay true to the brand, make sure everything, fits as holistically, good 360 marketing. But sometimes you move way too slow based upon, especially now, the pace of culture, trends, etc. And that's where small brands can really rise up, is that they're on social media platforms excuse me, rising social media platforms quicker. They're capitalizing on trends quicker. They're usually turning on innovation much quicker. So they're capitalizing on consumer demand quicker. But then in a small brand, you're more resource constrained. So
Mm.
the risk is that you're chasing too many trends too quickly. So you still have to have that strategic lens that you get from a big brand, which is, okay, what's my positioning? What's the market opportunity? What's the consumer demand? What do I want to go after? And so it's that balance as a small brand of still being strategic and true to the brand and using those frameworks, but doing it in a faster, more nimble way than big brands. That's where small brands can really. That's where they have the advantage is with really with speed and nimbleness in the market to reach consumer demand and trends quicker than big brands usually are able to.
Which I think is really interesting because you think about it. I mean, no one wants to make a mistake, but if you're PepsiCo, you, you've got tons of money in the bank, right? So if you
Mhm.
work on something and it doesn't quite go to plan, it's going to make a dent, but it's going to be fine. Whereas the smaller brands, they seem to be, from what you're saying there, more open to risk. But actually, if they get those things wrong, it can have a real impact on the future of the business.
Yeah, totally. That is right. That is um, that is that is a watch out. So it is important within the context of your business to know to really understand your financials well
Mhm.
and what your financial position is based on your marketing investments. That's obviously critical. Some brands that are smaller, they're more cash constrained. You want to be careful about experimenting and trying too much because you need to You need to watch that. Marketing investments, I think one watch out also, we might get into this a little bit more, and one of the challenges is levels of expectations on the time horizon in which marketing can help unlock growth because it's not the shortest term, lever. And so, you need to keep the strategy in mind, be very nimble. And also there's a mentality that I used to have, which is 70-20-10, that I think applies to both big brands and small brands, which is just generally speaking, 70% of your resources, effort, money go towards things that you would be tried and true, right? In your category, et cetera. So things that work, whether it's trade promotions or certain digital platforms, maybe like Meta that are very established. 20% may be areas and platforms more validated and increasing, but not still the tried and true. Those might be just keeping in the advertising space, maybe like the Spotify's or the TikToks of the world. And then 10% you take flyers, play
Mm.
small bets, right? The more effective way to do that, especially in budget constrained environment like you're talking about, is make enough small bets that you can get some wins, have proof of concept, and then start to spend, right?
Yeah.
Because that is one risk as a small brand is you're spending money all over the place. And so have a thoughtful approach to it. That 70-20-10 model has always been a frame of reference for me that's always helped. And then on your 20 and 10 ideas, have KPIs. What does success look like going in? Did we reach or not? And have a real objective lens, right? I think sometimes marketers can be caught up in the idea itself, but it's always good when you're thinking about where to place your bets, how to evaluate it. Sometimes it's a bit of a guessing game.
Hmm.
Sometimes you might have more data, but have a point of view of what does success look like for this. Try to pre-align with the team, go in, spend, take that 10% idea, try something on a new social platform, try a new creative idea. Don't blow your brains out with all the money. Keep it small, but have the KPIs and then evaluate it according to that. And then say, is this something we try? Do we try a new percent idea? Or does that 10% idea validate and want to put that in the 20% bucket? Now we're scaling some investment, et cetera. So that's always a model that's and an approach and a framework that's worked well for me in my career, and especially good on small brands because then you're still. And the nice thing now with digital is that you don't have to spend a lot of money to get some testing and data. That is the
Hmm.
benefit of digital marketing. That is the real benefit of digital marketing. You don't have to spend big budgets, wait multiple months. You need to give it time, but over a 4 or 6 week time horizon, you can start to understand trends. That's still a bit early. 8 to 12 weeks is better. Time is always better, but depending on the context, doesn't take a lot to test new ideas, test new platforms, have KPIs set up for those in advance, and then decide if you want to scale that investment more.
Nice. And I really like that concept of 70-20-10. Out of interest, Stu, in more recent years, whilst you've been in this sort of smaller, high growth environment, are there any particular sort of 10% bets that you've put on that yeah, you've struck gold with?
Yeah, sure this is not one that's a 10% idea anymore, but 4 years ago we started to scale one of the brands I was on TikTok in a way that was very focused on food and recipes. And at that time, TikTok was very much seen as just a dance platform. Now it's much more
Yeah.
ubiquitous. But we basically in 6 months equaled our same reach and impressions that we had on Facebook after finding the right creators, putting out good content, adjusting that content, seeing what works, not even putting much paid towards it at all. And so that worked well. So we're able to basically double our social reach with limited investment, but at the right place, right time, focus on the right creators, keeping true to our brand
Hmm.
and experimenting on the platform. So that was one that definitely paid off 4 or 5
Nice.
years ago.
And who would have thought back then we'd have TikTok shop managers and all these different.
So much has changed, and that's a great platform example.
Mm.
If and not all the social platforms turn out like that, right? There's only a few unicorns that really make it through. I know right now there's a lot of settling with X, and is it blue sky? Is it, as some platforms start to decline a bit, it's like what's coming out of that, how is it evolving? And that's hard to tell. And so I think it's very brand dependent. Where's your consumer? I think I always go back to consumer centric lens, right? Always go back to where's my consumer? Where are they going? What mediums are they on? Not just what I'm on or what I think the brand should be on. Let them guide you. Um, and some consumer groups are very tried and true. Like if you're targeting 45 plus, mainstream consumers, it's not smart to make a bet on TikTok. Or it might be based on the insights and data, right? That's also part of it. Is you got to let the data and insights guide you, but let the data and insights guide you based on your consumer, not based upon maybe your biases, and that'll help guide where the right bets are to make.
So looking back I guess as we've kind of established that there is a different mindset mentality when you're working in these different sort of type of environments. What's been the hardest unlearn for you, Stu, when you first moved from sort of big CPG into this growth stage environment?
Being able to move with less data.
Mm-hmm.
So still finding data points, still being triangulate. That's a big one. Um, moving into making decisions faster, which is a bit of an unlearn. Like, oh, we don't need a committee. We don't need a triple check. We can just keep this train moving down the tracks. This is great. This is refreshing, but still a new environment. I don't know if it's much unlearning, but just being more hands-on, that's the biggest difference between, big CPG and small in terms of like one example is, I talk a lot about this idea of consumer centric marketing. And in big companies or big CPG, you have a consumer insights team and they bring a lot of insights to you. And at small companies, you don't have an insights team. You might have a very small team, a very, very lean team. And so when you have an idea or you need to go get consumer insights, you have to unlearn just asking someone to do it and then figure out how do I do it. And that's empowering though. It's okay, I've got a problem to solve. I want to get some insights on this brand. Let me go RFP agencies. I'll work on the survey. So you're very hands-on with the work, which is the learning curve just goes way up, but you have to embrace that. You have to really unlearn this idea of, oh, I need the structure to do it, and I'm empowered to go figure it out. So it's a reframe, and it can be very powerful, but I also think it sometimes can be one that people can struggle with, and you have to get comfortable with that transition because that is a big unlock.
I guess it can give a little bit of a boost to your career as well, right? Because I mean, you were 15 years at PepsiCo, and I'm sure towards the end, things were very comfortable. You kind of knew there was the resource there that you could go to, and it's a bit like, yeah, let me see if I can do this without all that support with available to me.
Yeah, it's a bit like jumping into the deep end a bit, and you're ready to swim, but you don't really get the experience until you jump in. And so, and for me personally, I was just ready for that shift, and so I think it's very much a personal decision.
Hmm.
And it does take embracing new models, new way of doing things, rolling up your sleeves, um, working in less structured environment, but more empowering environment that's more nimble, that's faster, but less resourced, right?
Mhm.
So I think but to your point, it's very empowering, and the learning you get is significant because of the end-to-end aspect of these roles from brand strategy all the way through DTC channel management and the performance marketing and everything in between. And so there's a lot of growth and development that can happen in those roles.
Which leads me nicely on, because one of the things I also wanted to touch upon was looking at omnichannel, sort of brand performance,
Hmm.
full funnel thinking, which which I know, especially at California Olive Ranch, you guys are doing really well. How how do you see there's a big balance, right, between sort of brand building or long-term brand building with sort of short-term performance pressures. I think from my perspective in the market, obviously in the last 10, 15 years, a lot of focus has come for digital marketing, especially paid channels. I think even sort of CFOs and non-marketing leaders within the business, they can see we put $1 in and we get X dollars out. Whereas
Yeah.
building the brand longer term can be a little bit more difficult, especially to show those types of individuals the benefit to it. So, yeah, how do you balance that long term brand building with that short term performance pressure?
Isn't that the $1 million question, Alex? My best approach to that, and I think there's definitely not a one size fits all, and it definitely depends on the company and the context, and the pressure of the business. The way I think there's a couple important aspects to it. I think number one is level setting expectations and
Mhm.
understanding the business well. How much reading the room, so to speak, how much short-term pressure do we have as a business to deliver our results, to pay the bills? How much cash flow do we have to have more of a long-term mentality? So I'd say the first thing is really understand the numbers, understand the business, understand the context in which the CFO and CEO are going to view your ideas, right? I think that's very, very critical. So have that kind of GM mindset on. If I was the CEO, if I was a CFO approving this, how would I be looking at it, right? So understand your numbers, and understand the context of the business. The second piece is I would level set, I would use case studies and examples to level set expectations on what this short-term and long-term balance looks like. There's some good case studies out there. And the way I tried to frame it with our CFO in particular was this is not trade marketing. This is more like a capital investment in that if we want to hit next month's number, we should put it into trade marketing and take our prices down, and we'll see that lever. There are some things that have more short-term benefits than long-term business benefits in marketing, but we need to view this as a longer-term investment. But here's what we'll do. As we think about the budget, we'll take a full funnel approach. And this kind of gets to maybe my third point, which is if you have a full funnel approach, I think there are aspects of that investment that you can more quantify over a longer time frame. We can talk a little about that. And then other aspects that you can quantify over a shorter time frame. But the two work hand in hand, right? Like sometimes you might have a conversation with CFO and they say, well, I see your incremental ROAS on your bottom funnel is 3 and your top of funnel might be 2. Why would I ever want to, spend a media dollar that gets 2 if I can spend a media dollar that gets 3? And I said, well, they play different roles. The $2 investment is meant to bring new consumers, make people aware of the brand, bring new consumers that are going to be more incremental over the long term. So you might want to think about the metrics with that based upon LTV and longer term growth potential versus the short term might be more, hey, here's what we can deliver. Here's the CAC, here's the acquisition cost of this purchase. And so what I would say is don't have a one size fits all. Think about full funnel marketing. What of that can be longer term and how you would evaluate that? And then what would be shorter term, how you can evaluate that? And then report back to the business, have KPIs, set up in advance. I mean, KPIs, level setting expectations are critical, right?
Mm-hmm.
So that you can be on the same page with the executives and team going, here's what success looks like. And then on a monthly, quarterly basis, you're reconciling that, be very objective with those results, obviously. And then that'll be the best way to help balance the short and long term piece. As you think about full funnel and different metrics across the funnel to evaluate parts of the budget that can be evaluated more on a short-term basis and other parts of the budget that should be evaluated on more of a long-term basis and not just revenue related, right? That's the other thing I would say is use multiple data sets like upper funnel.
Mm-hmm.
You should be looking also at not just LTV, but brand awareness, brand health, things of that nature. Are we moving the needle? And you can look at those data sets more on a quarterly basis versus say, short term, ROAS, lower funnel, performance where you can look at a more monthly basis, clicks, etc. So I would also say try to spend time and investment up front on what are the data sets and capabilities that we need to effectively evaluate this, because I think those are very good investments to make in the business. And again, you don't have to invest big dollars, but also make sure big companies have this already. It can be more complicated, but for small companies, small brands, invest time and energy in the data infrastructure, maybe not infrastructure, but just data tools that
Mm-hmm.
help you evaluate that, because those are worthwhile investments in time to spend, whether it's brand health tracking, whether it's panel data as an example, if you can get that within in the retail space. Um, Data analytics modeling capabilities, right? There's a lot more efficient tools out there in this digital world that allow you to help paint a holistic picture, both short and long term, based upon the key KPIs for the business.
Stu, I couldn't have you on the podcast working in the recruitment industry as I do without asking you a question or two about leadership and hiring.
Yeah.
Curious to know though, how has your hiring lens changed from your PepsiCo days to now?
Mm, excellent question. I think in the world of small brands, you need people very hands-on, more hands-on keys. And
Hmm.
so part of it is looking for folks that have more functional expertise that really know depth in their roles versus say at a PepsiCo where you need to be more of a generalist and you need to be more strategic and a very strategic marketer. And strategy is important, but in the small brand world, you're just executing more. And so you just need people that, like, I'll take paid media as an example. We collaborated on a great hire for a paid media lead, right? And I need someone that does have strategy and can think big picture in terms of managing agency, but also is able to actually lead some of the platforms themselves, be in there looking at the data day in and day out, really know the intricacies of campaign structure, campaign setup, know the right questions to ask agencies. Whereas in the PepsiCo world, you can defer a lot of that to really big paid media agencies where you don't have to be as close and hands-on keys. And so I think even in that recent hire that's been a great success that we collaborated on, it's looking for someone who's more functionally experienced while still having some strategic background versus in the PepsiCo world, it can almost be flip. They don't need much technical expertise or technical detail. They can defer a lot of that, but maybe have more strategic lens. So that's definitely been a big reframe in the smaller brand world.
Okay, nice. In the last couple of years, I mean, the market, as we all know, has been challenging. I think from my perspective, within doing lots of recruitment searches, hiring managers have become a lot pickier. Um, One of the key reasons I actually sort of doubled down about 4 or 5 years ago within sort of the D2C CPG space is that every hiring manager was saying, look, Alex, we want the skill set coupled with someone who understands our business model, right? Whether that's D2C e-commerce and or subscription. I think because of the way the market has been, though, there's been another layer recently that's been added on where I find a lot of hiring managers or founders wanting individuals with that, but also having been on the same revenue journey, perhaps where they are on currently. Now, I mean, if I was to look at your CV in this sort of day and age, coming from somewhere like PepsiCo, I think a lot of the clients that I deal with, it would be very difficult to sell in or to get someone like that in front of a smaller business. I'm really just curious, how did you find making the move from the big CPG PepsiCo environment into the smaller brands? Were you met with any resistance, or were there certain ways that you were able to frame the experience that you had that resonated with these smaller businesses?
Yeah, it really comes down to fit as you make that move, right? And I think some small businesses are, I'll just give my experience. So part of the first brand I moved from PepsiCo to lead was a brand called Go Raw in the it was a sprouted, organic sprouted food brand that was all in pumpkin seeds, sunflower seeds, so high protein. Also use those in granolas, bars, a variety of and it had an established executive team that I was coming into that had an experienced CEO and team that had also had some small big experience, but they came from big CPG. So they were cut from a similar cloth, right? They appreciated some of the frameworks, they appreciated some of the thinking. I had to learn the new ways of working and the new model, but some of the frame of reference, ideas, things I brought to the table, they understood the approaches, the lingo, some of the frameworks because they too had come from that background. I'm not saying every big CPG marketer who's small needs to work for a boss that has worked in big CPG, but I do think it makes that transition smoother because when you're learning new categories or and learning a totally different size of business, there is a big learning curve. So I think ways that you can find where there's more of a fit, where there might not be as steep of a learning curve, can help. Because I do think if I'd moved from, say, big CPG to working for, and at that point we were already cash flow positive.
Hmm.
So I also think size of business, we were still small. We were 35 million in revenue. So it was a small business, but it wasn't, fly by night operation. I think I would have struggled more had I gone to work for a pre-revenue founder. Like
Yeah.
that would have been so early stage, it would have been too much. And so I think there's a lot of transition on big to small. So finding ways where it's a softer landing with maybe the size of business. And I would also really think about the leadership team. Who else is on the leadership team? Do I share some backgrounds and some experiences? Is everything going to be foreign? Do they also have CPG experience? Are they other industry? Have they worked at a big company? Have they not? And so I would also fit is just so important, and finding the right leadership team that you fit with as you make that jump is key. And luckily, I had a really good fit and really good experience, and so I was able to then leverage that, learn more, continue to develop and grow in the small brand world. But um, that's part of what made the transition easier. So that would be a lens I would think about if I was someone else wanting to consider this kind of big to small switch.
Okay. No, that all makes sense. And I guess that's the beauty of careers, right? It's
Mhm.
they're never linear, and one person's experience will be very different to the next man or woman. So yeah, but no, very interesting. Hey, I wanted to just as we're wrapping up, I just wanted to look ahead because at the time of recording, you are the CMO at California Olive Ranch. Now, by the time that this episode is published, it would have become LinkedIn official that you're moving into a PE operating partner role. What lessons from your career are you most excited, Stu, applying across different businesses?
I'm really looking forward to all of it. I've heard this analogy before that I think is so apt for many roles, and especially the role I'm moving into, which is being able to be a helicopter where you can sit strategically at 15,000 feet to in a portfolio of companies, best practices, etc. But when you need to go to the ground, you can get down to the ground quick and step in and help in very functional ways, in very day-to-day ways. And so I'm looking forward to the opportunity to take the breadth of experiences that I've had leading marketing for PE-backed companies, but more now working for a firm here locally in Dallas that then can advise across the group of portfolio companies, but not just from a strategic standpoint, right? Being able to go,
Hmm.
being able to provide very functional, specific, growth-minded, growth-oriented ideas to help the business on also a day-to-day level as well.
Nice, nice. Well, I wish you the best of luck in that new role. And I thank you for spending time and coming on this podcast with me today. I'm sure there will be many marketeers that listen to this and pull some nuggets of gold out of this. For anyone that perhaps wants to follow you on your journey, Stu, how can people do that?
LinkedIn's the best way to do it. So follow me on LinkedIn. Let's connect. DM. I always like to network and connect. So that's that'd be the best way to do it. But Alex, I appreciate it. That was a great conversation today. It's been great to work with you over the years. Yeah, hopefully there are a few nuggets in there for people, and they can get some
Definitely.
usefulness out of it. So I appreciate the time today as well.
Thanks, Stu.
Thanks, Alex.